So today I'm going to show you a couple ways of how to build a portfolio in Australia. So I'm only going to show you BlackRock products today, but I am building Invest Oz. It's going to be a little more unbiased than this, and it treats your money like a target date fund. Basically, you just want to reduce the risks as time goes on. So there's a couple major asset classes, equities and fixed income. There's global equities, and this spreads your money all around the world. And then for fixed income, there's global bonds, which spreads your money all around the world with bonds, and then an aggregate bond. This just spreads your money across the Australian bond market. So you can use IOO. This is the iShares Global 100 ETF. It invests in the world's biggest stocks. It's that easy. And you can use IAF. This is the iShares Core Composite Bond ETF. This gives you access to the core Australian bond market. With a two-fund portfolio, you can customize it however you want. IOO is your offense, IAF is your defense. You're an 80-20, 80% IOO, 20% IAF. But again, slowly taking the risk out of your portfolio as time goes on just makes sense. It just helps eliminate the sequence of returns risk. But that may be too simple, you say. So when it comes to the Invest Oz asset classes, there's going to be 10. 5 equity and 5 fixed income. From highest to lowest risk in the equities, it goes emerging markets, then international, then global and US sector, then American, then Australian. For the fixed income, you're going to be in foreign bonds, then Australian corporate bonds, Australian government bonds, commodities, and money market. So when building a 60-40 portfolio with these asset classes, you're diversified and there's not a lot of correlation when you use these separate asset classes. This helps smooth out the volatility. And yes, some ETFs are going to perform better than others at some times, but you're going to want to buy the ones that lost money. I know it sounds counterintuitive, but that's what you got to do. Sell your winners, buy your losers. Putting 8% in IEM, 10% in IVE, 12% in IXI, 18% in IVV, and 12% in IOZ. That takes care of the 60% of your equity portfolio. These are your stocks. 9% in the iShares Global High Yield Bond Aussie Hedged ETF, 10% in iCore, 7% in ILB, a government inflation ETF, 10% in physical gold, GLDN, and 4% in ISEC. Rebalancing your portfolio every January to something like this is going to keep you out of trouble. But if you're all equities, just use the picks on the left. So hopefully this video has given you enough information to leave your financial advisor, because all you need is a money guy now.